Two topics dominate discussions in financial markets these days. It's the supply bottlenecks for companies and the bond yield in the US. I want to discuss this with Felix Brill, the Chief Investment Officer of VP Bank. Felix, when companies are claiming they have supply shortages, what risk does that mean for the economy?
They have negative impact right now. We see that in the numbers. Economic growth is slowing in the fourth quarter. However, we don't expect this to last. We think it's temporary because order books in the manufacturing sector are full, and we see upbeat consumers. Consumer sentiment is still at very high levels, and this is actually good news for the economy.
But there are different signals from the bond market, where the short-term interest rates have risen.
It means that we see more pessimism there. It's a bit more mixed back here. In the past, whenever the yield curve flattened, and when it flattened so fast, it was a warning indicator that the economic outlook is deteriorating, that there's even a risk of a recession. But having said that, we also have to take into account that bond markets tend to be a bit too pessimistic from time to time. We think this is an occasion of a bit too much pessimism. This is going to go away, and we expect the yield curve to steepen again going forward.
And how are equities reacting to the supply shortages and also the tapering of asset purchases by the US Fed?
Very well, actually. The Fed announcement basically has been a non-event. So equity markets are very much on the upward trend right now, new all-time highs, especially in developed markets. And this was also supported by good earnings for the third quarter, I think. So the basis is there to be positive about the outlook for stock markets.
Now, overall, should investors take a more defensive stance or a stance more towards growth?
I think growth is still the theme to be invested in. We are very positive about the outlook for next year for the economy, and this is also what we are doing. So we are having equity quota fully invested, as we would like to have it in the strategic quota, which is geared towards growth, towards the economic recovery. However, it's also important to make sure that you're not surprised. I mean, there are risks there out there. We see the negative signals from the bond market, so make sure to be diversified, adding some defensive elements to your portfolio. And this could be, for instance, minimum variance for equity selection, or adding gold to make the portfolio more robust.
Thank you, Felix. And here's a little teaser. As of December, you'll be seeing our research and analysts' comments on our websites and for clients in the e-banking environment. You'll see the notifications as soon as it's live. This concludes our View the Questions. If you like, we'll be back in December. Thank you and goodbye.